As I mentioned, we are broadcasting with the webinar today, so I'd just like to welcome those that are participating through the webinar. Thank you for being here.
Thanks, JoAnn. We're going to go straight into the agenda because we do have a lot to get done this morning, and I do want to again extend my thanks to some of our advisory committee members in this room. We have a number of tax assessors and tax commissioners that are here with us today. It's always very helpful when you have the people that are on the front lines actually conducting the day-to-day business required of these policies to be here to speak from a first-hand knowledge of how it's affecting their operations in your counties. The first part of our agenda is to discuss some of the new property tax issues that this committee may want to look at over the summer months. Again, this is the first meeting, so we have plenty of opportunity between the first and second meeting to have subcommittees or to have research conducted. So this is just to kind of kick off and get things started today, and I'm sure some of you may have brought some of your own items that you want the committee to consider today, and we'll do that. But as it relates to property tax, the first item on here was a piece of legislation that was out there this year. It made it through the House, made it through the Senate. It was changed in the Senate, and it went back over to the House for a conference committee that never did submit a conference committee report on the last night of the session. So it was alive right until the end. That's House Bill 295. You do, in the left side pocket of your folder, have a summary of House Bill 295. This bill has gone through many, many revisions, even prior to the legislative session starting, as well as during the legislative session. And I wanted to point out to you some of the provisions in this bill. The provisions that we have in our policy platform are highlighted. So that's what the gray highlights mean. However, as you can see, there's a whole lot of changes to the property tax laws in Georgia that we don't have a position on. Some of this you may not like, some of it you may be indifferent about, some of it you may support. So I think it's important for this committee, between this meeting and the second meeting, to consider what's on this sheet and decide if we need to modify our platform to maybe reflect some support for some other items that we're currently not supporting. And then if there's some things in here that we really have problems with, to make sure we highlight those areas of the bill that we have problems with. But like I said, this bill came very close to passing this year. I will tell you the only thing that kept this bill from passing was the Superior Court Clerks Association. During the legislative session, they saw this piece of legislation as an opportunity to get some additional compensation for running the boards of equalization. When they originally came to ACCG, they wanted to be able to opt out and make the decision whether they oversaw the boards of equalization or not. At that point in time, our policy council said, no, we think it ought to be uniform across the state. Then they began to pursue a salary supplement. And with long story short, at the end of the day, really what they wanted all along was not to be able to opt out. It was they wanted additional personal compensation for running the boards of equalization. The salary compensation in the final amendment to this bill was tied to how many appeals they handled in the prior year. And I can't remember the scale off the top of my head, but it basically went up to, if they handled a certain number of appeals, it would be an additional almost between $6,000 and $7,000 a year in personal compensation. And for some of you, that may not sound like a lot of money. For others in the room, it may be a lot of money. But the point that I think our policy council had to grapple with was, what precedent does that set? And if you do it for the Superior Court clerks, I'm sure the tax commissioners would argue that they took over TAVT a few years ago and they didn't get any personal compensation for taking over TAVT. And if you support giving the clerks personal compensation for BOE, then they want personal compensation now for the Title ad valorem tax program, which arguably is much more labor intensive than that. So it was really more philosophical. We really just couldn't support the across the board state mandate. If you all individually want to give an additional salary supplement in your county, you're free to do that under today's law. We don't need a law for that. And so we were able to strip out that amendment on the bill while it was in the Senate. And when it went back to the House, because it didn't have that amendment on there, they had a pretty tight relationship with the Speaker's office, and they were able just to kill the whole bill because they didn't get what they wanted out of it. They didn't. I want to point out they didn't have any problem with the underlying bill. In fact, many of the things you see on this list, they asked to be incorporated in the legislation, and we did incorporate it to help them administer the BOE. So they got everything they wanted from an administrative standpoint, but they didn't get the personal compensation, and that's why the bill failed. We do need to think between now and the next meeting, and maybe there needs to be maybe a subgroup that meets with Superior Court clerks to talk about this, but is there a way to revive this legislation? They claim that they're going to come back next year and do the same thing if we try to bring this legislation up. They will not support any property tax legislation until they get their salary supplement. Of course, I can tell you there's some property tax bills I'd like to give them to kill, just not this one. But I wanted to make it clear to this group what happened with that legislation. And with that, let's maybe go through a couple of the items on here. In Section 1 of the bill, it authorized your tax commissioner, with the consent of the taxpayer, to send out electronic tax bills, which obviously saves you money in postage. And some counties, especially maybe the larger counties, are wanting to move to electronic tax bills in the future, and this would sort of begin that process, because right now you legally cannot send it out electronically. It all has to be done through the U.S. mail. I'm not going to hit every one of these because we just don't have time. The highlighted ones, again, are the ones that are already in our policy platform. The first highlighted one is to reduce the minimum time period for the notice that has to be published in the paper in the 5-year history from 2 weeks to 1 week, again, to save you time in getting that digest completed. Under Section 4, gives the tax commissioner an additional month to submit the tax digest. As you know, it's due right now August 1st. However, I believe, I don't remember what the number was last year, but I want to say it was only around 40 counties that got it in on time. That seems to be pretty consistent, that the majority of the counties never get it in on time. And so we just have to recognize that for various reasons, it seems to be impossible for counties to meet the current timetable for submitting the tax digest to DOR. So I think giving the tax commissioners that extra month would greatly help. In Section 5, authorizes 2 or more counties to form a regional tax assessor's office and share staff resources. So this may be, again, consolidating the entire office, or it could be just sharing staff resources. For instance, we got some timber counties that can't afford a certified forester for their county, but if 4 or 5 of them went in together and paid for a position, maybe and that person could work a region, they could afford a certified forester. That's just one example. But as we look more and more at functional consolidation in the state, there's a lot of opportunities when it comes to appraising property, how you all, especially some of the rural counties in here, can pool your resources and get a higher quality or higher level appraiser for less money by using that person in a region, because you don't have the need for them year-round in your county, but by sharing them, you can keep that person busy year-round. And so that was in the bill to allow for that. It doesn't require it, just simply authorizes it. The Board of Commissioners would have to make that decision working with a neighboring county if you wanted to actually implement that. In Section 6, one of the problems that we see, and this seems to be a growing problem, with what they call a 3-year lock, and for those of you who aren't familiar with the 3-year lock, maybe when you leave here today, you'll be happy you came to the meeting just for this information, but when you appeal your value, when it goes to the Board of Equalization and a new value is established, the tax assessors cannot change that value for the next 3 years, or for that year and the next 2 years. And so that's why we call it a 3-year lock. Well, what some people are doing is they're gaming the system now. They don't have a problem with their value that you have on the property. In fact, they probably think the value that you have on their property is a correct value. However, what they're trying to do is get ahead of inflation in the marketplace. They maybe have lake property, and they see that it's likely that their values are going to go up over the next 4 or 5 years. In fact, as we come out of this recession, there's a lot of people now that are starting to see values start going back up. And so it's a preemptive move that they go and appeal their value. They don't show up to the Board of Equalization, don't do anything except just formally go through the appeal process. So they're really not, they're going to lose. But it doesn't matter that they lose, because when the tax assessor, or excuse me, the Board of Equalization places the value at what it has been previously, it gives them that value for the next 3 years. So it ensures them that their value will not go up for the next 3 years. And what do? In 2 more years, they do the same thing again. And by rolling that lock, you can never go up on their value. So if you own $1 million property on a lake and you think that values are going to go up significantly, it's a loophole, and they're gaming the system by continuing to go through that appeals process just to continue to get that lock and keep that lock in place. And so what the provision in the bill would have done is it says that you've basically got to win your appeal, or there's got to be a change to your value. They've actually got to lower your value. But them simply leaving your value what it was last year doesn't automatically give you that additional 3 years protection. So that's in there. Again, a lot of consultants that do tax work for residential and commercial properties are starting to pick up on this and actually push it with their clients, saying, I can tell you how you can basically freeze the value of your property. Section 8, the hearing officer, which was a new appeal route that was put into law a little over 3 years ago. It's not used a lot, but when it is used on especially complex properties and high dollar properties like commercial properties, it seems to be working. It allows for somebody with a little bit more professional experience in appraising that type of property look at the appeal instead of your Board of Equalization members that usually don't have the training to look at those complex properties. The current value limit is non-homesteaded property $1 million or more. And in this legislation, we were going to lower the threshold to $750,000, so more people could take advantage of that appeal route that wanted to take advantage of it. Next one below that authorizes the use of the most applicable proposed millage rate on the annual assessment notice. As you know, under the new law, everybody gets an assessment notice every single year, whether their value changes or not. And one of the problems that we've run into in certain circumstances, the last year's millage rate is not very applicable, especially for some of these that are going on appeal. And the whole purpose of that notice is to give people a general sense of what kind of property taxes they would be paying at the end of the year. And if you're using a millage rate that's really not applicable, you're giving people bad information, and when they get their tax bill and it's very different from what you showed them on their assessment notice, they get upset about that. Steve, do you have any comments about that? That's something that I know your association had been asking for. Some examples of when the millage rate that is put on place on that assessment notice is very different from the millage rate at the time that they get their property tax bill.
Pretty well, Clint. I mean, the idea is that the millage rate is set during the appeal process. We should be able to utilize that new millage rate when we send out an adjusted value on a 30-day notice. So we have the new millage rate and give a better estimate of what that tax bill is going to be. I mean, it's just a taxpayer-friendly provision. I'm sure that most of the jurisdictions would agree, but it solves a lot of heartache for the taxpayers down the line.
So this is not talking about the general notice that goes out to everybody, because you don't know what the millage rate's going to be. But this is on the you say the adjusted one?
Yeah.
All right.
Yeah, if there's an adjusted assessment notice, that's primarily what we deal with. Very, very few, if any, jurisdictions set the millage rates before the notice is filed. Can imagine that would ever happen.
Stephen?
The state levy's going down every year, so we already know right now.
Yeah.
So we put that on the assessment notice, we're going to be prior year.
Right, knowing you know exactly what it's going to be the following year. Yeah, that's a good point. Under Section 9, I want to point out the first one under Section 9. Under current law, there's really no means, if you've got a bad actor on your Board of Equalization, and I hear stories where there are cases where members of the BOE don't perform professionally like they should, there's really no means to remove them. Once they're there, it's hard to get rid of them. And so in this legislation, a provision was added to allow the Superior Court clerk working with the grand jury to remove a member of the Board of Equalization. Now, as you know, the grand jury appoints them, and so this change to law would also allow ultimately the same entity that appointed them to remove them if the Superior Court clerk, working with others, can show the grand jury that this person is not performing professionally in doing their job. So it would provide a means there to get rid of those bad actors. Down under Section 9, line 303, requires BOE members to complete an additional 20 hours of training after every term, so after every 3 years. Again, there's a lot of complaints. As you notice, a lot of things in here deal with the Board of Equalization, but there's a lot of complaints from the public that the Board of Equalization members are not getting adequate training, and they don't feel like that they've truly got a neutral body that knows the laws, that can give them a fair shake when checking the value of their property. So that's what a lot of these things are geared towards. Further down on line 470, taxpayer may submit an appraisal supporting the appeal that was performed within 9 months prior to the date of assessment. For various reasons, you may have an appraisal done on your property. You may be refinancing your home and have an appraisal done. Right now, there's nothing in the law unless you go through, there's a certain type of appeal process using, it's called binding arbitration, and you have to submit an appraisal in that case. But under the normal appeal route where you go to the Board of Equalization, there's nothing in the law that says that the tax assessors or the Board of Equalization have to even look or consider that appraisal. And what we're saying is they ought to at least consider it, because quite frankly, fee appraisal, which is what an appraiser would do when you're refinancing your home, is generally going to be more accurate than mass appraisal, which is what your tax assessors do. So if somebody's gone through the expense and hassle of doing a fee appraisal, why shouldn't that be considered when trying to determine if they have a correct value placed on that property or not? So again, as you can see, a lot of things in here are very taxpayer friendly, and the idea here is to continue to improve the property tax system so it has at least a more of a perception of being fair than it currently does. Otherwise, as you know, the elected officials in this room, you're the ones that usually get the complaints about the property tax system. As that drumbeat is louder, it gets back to the General Assembly, and then we wind up with legislation like we did a few years ago where they want to do away with all ad valorem taxes in the state. And I think that's the fear. If we don't continue to be proactive as an organization working to improve this property tax system, then when people continue to complain, we're faced with some very draconian measures being placed on us, such as assessment freezes or elimination of the property tax altogether. So I think that's why we're trying to be proactive on these things. Again, I don't have time to go through all of these, but if you would, between this meeting and the second meeting, look over this piece of legislation, and we need to maybe determine what should be added to our policy platform. Things that you maybe like in here that you want to support that aren't highlighted. If you'll send us your feedback on that, we'll determine if we should maybe include some of these in our policy platform. Again, I think it looks good for our association to be proactive when it comes to improving the property tax system, since even though you're only one of the users, obviously the school boards use it to a greater extent than even the counties do, but you are the ones that administer the property tax system. And when it comes to these complaints about how it's administered and how the appeal process works, it's really in our wheelhouse to determine what needs to be done in that area. Susan?
I have a quick question, Clint. Since the Park Association has indicated they're not going to support anything unless they get payments in there for compensation for that, is there any thought to taking this item and abiding time doing some individual legislation to try to cover some
Sure.
of the more, the points that the group would think were more important, priority-wise to do that? Because I know we had legislators the past few years introduce the legislation that would allow for tax bills to be sent electronically. And of course, that didn't get pursued because everything was put, particularly past year, into 295. I was just wondering if that might be an approach, since the court clerks say they're not going to support a comprehensive bill.
Well, absolutely. We can break it up and submit multiple pieces of legislation. I will say, Susan, that they said that they were going to attach it to anything we it doesn't matter how far we break it up, they're gonna try to put it on everything that we send through the General Assembly. That's really a conversation we're gonna have to have with their association over the summer. As for those of you that were here for the General County Government Committee this morning, remember there was some conversation about COAG, wanting, which is the Constitutional Officers Association, which the clerks are a member of, wanting to look at updating that whole salary schedule. So there may be an opportunity, while COAG's talking to us about that salary schedule, to talk about, what the clerks want on additional compensation for the BOE and address it there. We also probably need to set up a meeting in the Speaker's County and meet with the Speaker's Chairman and the Speaker himself on this topic. But anybody else have any questions about anything in this legislation? Again, I wish we could spend all 2 hours just going over this particular legislation, but as you see, it's pretty comprehensive. It makes a lot of changes to the property tax laws of Georgia. And there was a committee that worked on this legislation made up of tax commissioners, tax assessors, the private sector, attorneys that work for private taxpayers, ACCG, GMA. So it was a very, very large group that worked on this for about 3 years. So it has been vetted significantly to this point. So I think it's, something that needs to be looked at if we can get over that hurdle with the Superior Court clerks looked at again. Okay. The next item is dealing with conservation use assessment. Everybody in here familiar with CUVA, Conservation Use Assessment Program? We have a senator who chairs the Economic